can you explain why people would take out insurance for inheritance tax and how it works?
Yeah, so obviously inheritance tax can be very expensive for some clients if they've got big estates. And looking at insurance policies to cover you for a part of it or all of it isn't a bad option, but they can be very expensive. So a lot of clients look at second death cover, which obviously when the first spouse dies, it doesn't cover that, but it covers on the second spouse dying. That can be a lot cheaper rather than insuring both of you individually. It's not very cost effective if you're very elderly or ill. Premiums generally are too high. They can be very, very useful if you're giving gifts. So if you're gifting and you've got a 7-year time clock ticking, you could take out term policy on second death for that period to make sure you're covering yourselves in terms of the potential tax charge. And it can also be decreasing for the 80%, 60%, 40%, 20% as well. So that can be more cost effective. I have a number of clients who do take out a level of insurance, normally on things where they know that the assets can't be turned into cash quickly. So if they're holding property or their main residence is £1.5–2 million, you're guaranteed to pay inheritance tax on it because you can't get around it. But they might want to take insurance to cover that bit for themselves. So it's not necessarily to cover everything, but possibly to cover part of it.